Steve Fried in Chicago with the comments after the USDA May monthly supply and demand report. Well, the USDA had a little bit for everybody. I think the number one thing that the market's looking at is lower corn prices. The USDA did lower the US 13-14 corn carryout more than expected due to higher export numbers, but they came in and kept their yield for 14 at 165 and raised the carryout for next year a little bit more than the market had done. The big news in the corn, though, is they raised last year's world corn carryout due to higher carryouts in China and Brazil, and they did the same thing for this coming year. So the corn carryout worldwide is up quite a bit more than what the government and what the trade had thought it, and that's weighing on corn prices. Over the wheat, the winter wheat crop number was lower than expected, and the market is concerned that the hard wheat crop could end up lower than what they said today. Still, they left the carryout unchanged due to lower usage numbers, and for next year they actually dropped export numbers lower than this year. So they're trying to keep the balance unchanged. Globally, they brought down the Ukraine numbers a little bit and still showing big crops like in India and big crops in Australia and big crops in Europe. And so they're trying to show a little bit bigger world numbers in wheat to offset the lower U.S. numbers, and that's got wheat down a couple of cents. I think the main thing is what happens now in Ukraine and what happens worldwide, both supply and demand. Over the beans, as expected, the USDA raised demand for beans this year, but they also raised imports to a record 90 million bushels. Bean prices are a little bit higher as the market tries to figure out how do we get from point A to point Z before the next U.S. harvest. They did show an increase next year of world soybean supply up to a record 82 million metric tons, which should be bearish to prices. So USDA had a little bit for everybody. The higher world corn carryout is negative to corn. The lower U.S. winter wheat crop especially offers support to wheat, but the bigger wheat numbers could offer resistance. And as far as beans are concerned, when you look way ahead to that big bean carryout for next year, that's bearish. The next thing we trade is weather, and everybody's trying to focus on the U.S. weather pattern and whether it's going to be normal this year or whether some of that dryness in the southwest plains is going to move up into the Corn Belt later this summer. So now we focus on the weather, and we'll keep you updated on that. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.